Good evening, and thank you for joining The Breakdown with me, Toni Waterman. Here are the big topics we'll explore tonight. Cryptocurrency crash. Once the darling of adventurous investors, Bitcoin is 80% off last year's highs. And it's not the only crypto collapsing. We'll find out what the slump means for Bermuda's crypto ambitions. Insuring digital assets. A few brave firms are taking the plunge despite the uncertainty. We have a sit-down with one of them. Plus, mining for crypto gold. Two local crypto fanatics going round the clock to unlock new coins. Yes, you heard it here first, folks. There are at least two people in Bermuda who are mining cryptocurrencies. We're going to get to that story a little bit later in the show, but first, I've got some explaining to do when it comes to cryptocurrencies. Now, you may remember that the very first edition of The Breakdown, we took a look at blockchain. If you have not seen that episode, please head over to our YouTube page and check it out. So blockchain is the foundation on which cryptocurrencies, most cryptocurrencies, operate. And because of this technology, money can be sent practically anywhere in the world, safely at the touch of your finger. We're going to break this down for you in just a moment, but first, Gary Foster Skelton took to the streets of Hamilton to find out how popular cryptos are in this week's edition of Your Take.
Do you or would you invest in cryptocurrency?
No and no.
Yes, I would.
I've read a lot and quite frankly, no.
Yes, I would.
Not really at this time.
I just honestly don't know that much about it.
I don't understand it.
I'm not too sure what it is.
It's intangible, so I don't really understand how it works.
I'm not sure if it's a fad or it's going to be a bubble.
Yeah, I support cryptocurrency and blockchain 100%.
No, I'm still not that trustworthy of it.
I believe in fintech, but not cryptocurrency. It's a scam.
Yeah, I've actually been thinking about it here recently.
I would think more about it now because I've heard that Bermuda's actually involved with actually regulating it.
Do you think cryptocurrency will eventually be widely accepted?
Yeah, I think that's the way forward.
I think so. I really do.
I think it's something that's growing in Bermuda and across the world.
As it's used more, it's going to essentially propel it to be valued more.
Currency is evolved. Remember, at one point we were paying for stuff in salt and bags of rice and actual gold.
I believe the platform that it's built off of, so like the exchange of money without the connection of the people could be widely accepted, but the actual currencies, it kind of just seems like anybody with some money can pop up with one.
Some of the biggest investors in the world, Warren Buffett, for instance, calls it a scam, and his opinion is good enough for me.
Well, if you can't take the word of Warren Buffett, really, who can you believe out there, right? All right, let's take a look at cryptocurrencies and break it down for you. So cryptocurrencies, sometimes they're called digital or virtual currencies. They essentially exist as little bits of computer code. They're not tangible the way that a dollar is, although they do hold value, and some businesses do accept them as a form of payment. Now, the cryptocurrency that you're probably most familiar with, or perhaps you've heard about, is Bitcoin. It has now been around for about a decade, if you can believe it. But the crypto space has become very crowded in the last couple of years. There are about 2,000 cryptocurrencies in circulation right now. And when you add them all up, they have a market cap of just about $120 billion. This number right here is very hard to nail down because these coins tend to be very, very volatile. Their prices will fluctuate quite a bit. So how does one go about getting their hands on some of these cryptos? Well, there are basically two ways to do that. You can head over to an exchange and you can buy them like you would buy the euro or you would buy the dollar. Or you can do something known as mining. This is a bit tricky of a concept, but essentially what it means is using your computer to unlock new coins. And this is where that blockchain technology comes in. So remember with the blockchain, it's a network of public computers spread all across the world. And what these computers are doing is that they are verifying transactions and they are creating and maintaining a database, a history of those transactions. Now, at the same time, these computers are working on very complex math problems. And the computer that solves the math problem first is rewarded with a cryptocurrency or a piece of a cryptocurrency. And so these cryptocurrencies, they have value in much the same way that money has value. And that is because people put their trust into it. They validate the value of these currencies, because after all, right, the US dollar is just colored money at the end of the day. So once you have these cryptos, what are you going to do with them? Well, first off, you're going to throw them into a wallet. So there are a couple different types of wallets, but mainly they live online or they live offline, hot and cold wallets. Now, when it comes to actually using this currency, that's going to really depend on a business's appetite for this type of technology and taking on that risk. Remember, the value of these coins can really shrink or grow. And also, they can be hacked and stolen without a trace. So here in Bermuda, I'm only aware of one place that accepts cryptocurrency as a form of payment, and that is Scooter Mart. Although I have to say, St. Michael's Parish was accepting Bitcoin as a form of donation. I don't think they got any. So they nixed that program, which is really interesting, right? The church leading the crypto crusade. So what's happening in this space right now is really interesting, because what we're seeing is that we're seeing a price collapse take place, which kind of makes you start asking the question, what is that going to mean for Bermuda's ambitions as a crypto island? Well, to help us answer that question, I'm joined on set by Dennis Pitcher. He's a tech entrepreneur and fintech columnist. Dennis, thank you so much for coming back to the program. I want to start off with price, because cryptocurrencies tend to be very volatile. But the sell-off that we have seen in the month of November is impressive even by crypto standards. What exactly is going on here?
It's basically been driven by a lot of hype. As we talked about in our last program, is that people got very excited about the possibilities of what could be achieved and wanted to kind of buy into it and get rich quick. Unfortunately, the technology is going to take a lot longer to actually reach those high expectations, so people are now getting disillusioned. They're looking at what can they do with their money, where else can they put it, where else can they spend it, just because it hasn't lived up to that expectation that was originally set.
I mean, you have a great chart that you use, which is the hype cycle, that shows that bottoming out, sort of that disillusionment. Is there a possibility that it could just stop right there and we don't actually expand on to the productivity part of that graph?
It's certainly possible if for some reason we discover that there are no practical applications of this technology, but there have been many different players that have found use for it so far. We are in early days, but we have people like Christine Lagarde of the IMF coming out and saying that central banks should be experimenting with this technology. So it could change a lot over the long term. It's just we may be in for a very long trough of disillusionment.
It is interesting because there are some governments that have already launched their own form of cryptocurrency. So Dubai has done this already. And then we also have Venezuela with the petro. And you have India, who's also looking at potentially putting out their own government-backed cryptocurrency. Do you think that model would work here in Bermuda? And do you think it would help with the adoption of this technology?
It certainly could, and I think it will happen in the long run. It's just a question of whether or not the technology is mature enough to be safe to be used, if we trust it enough, and if people are going to adopt it. It's rather complex, and we're still discovering how to make use of it properly. So, I mean, we could look at early experiments or pilot projects. A great example is the bus tokens. Right now, you can buy this, you can transfer it to someone else. It is a digital form of money. It's not actually the Bermuda dollar, but it's transferable on the bus network. Now, what is the reason that we couldn't create a digital version of this, a transport token, that could be used on island and have a lot of the same properties of being able to transfer, buy it in a hotel, buy it at the post office, in order to experiment with the technology in more of a safe way?
Do you think that is what is going to happen, that Bermuda is going to adopt cryptocurrency in that way? Or do you see Bermuda becoming more of a place where companies come, they set up shop, they launch their ICOs from here, and they really try to attract overseas clients?
I think what we're seeing globally is that people are starting to come to terms with the idea that this is really a digitization of traditional physical concepts. So, I mean, being able to create a digital currency or digital money brings a lot of efficiency to how you can transact. So we're going to see it applied everywhere. It will be in Bermuda, it will be globally in every country. Eventually we will see governments launching their own digital money.
I did a poll on Twitter because I think it's a great way to reach out to not just people in Bermuda, but really globally. And the results of that, we're gonna throw it up on the screen here, but the results of that basically said overwhelmingly that people think it's gonna be a hybrid model going forward. Do you agree with that?
Absolutely. I don't necessarily agree with the belief that this is going to entirely replace our existing financial system. It's more so that it's going to make our existing financial system more efficient. There is good reason for being able to digitize money. I mean, there's a lot of expense in our current financial system that we can reduce, that makes things more efficient and makes business more productive.
Do you think that the sell-off that we're seeing in the crypto space right now will delay the rollout here in Bermuda, will somehow curtail Bermuda's ambitions?
It's certainly going to reduce the amount of hype and the amount of money that was thrown at people, but I think it's going to filter down to the people and the companies that are really dedicated to building products. And that's been the big disconnect so far, is that we really haven't had people focused on delivering value. And that's what we haven't seen enough of, is value and actual real world solutions. We don't need just another currency created that like Dogecoin, or another currency on top of that. We need real innovation.
So, Dennis, I do want to talk to you about what's happening in the United States right now with the SEC, the Securities and Exchange Commission, because they have been kind of cracking down on ICOs. And for our audience who's perhaps not familiar with what an ICO is, this is basically an initial coin offering. And for a lot of crypto startups, this is the way that they raise capital to get their venture off the ground. So you as the investor, what you are buying is basically a token to use in a future ecosystem. So you can almost think of it as buying casino chips for a casino that hasn't been built yet. What's happening in the United States, right? So we've seen hundreds and hundreds of these ICOs. And what's happening now is that the SEC is going after some of these companies and saying, you didn't register this as a security. I'm wondering if they're going to be able to do that outside of the United States, because there already has been one case where they went after a company in Quebec for not registering as an ICO because they targeted American consumers.
It's one of the troubles, is that people have been hoping to escape securities laws or U.S. securities laws with these ICOs. But the challenge is that if you market to an American or citizen, regardless of whether or not they live in the States, if you market actively to Americans, you can fall under the remit of the U.S. authorities, where they will pursue you. So you have to be very careful in managing the expectations of the securities laws, and that's what we're discovering now, is that the SEC is providing guidance through enforcement.
So even though a company here may come, incorporate, and launch their ICO and be completely up to snuff when it comes to the local laws, they may still have to then register in the United States.
Yes, you can't avoid the securities laws globally. What we really want to see is more structure around how do you adhere to it, so that you can actually tap into the global markets as well as the US markets. And that's where a lot of the interest lies today.
Fascinating, fascinating stuff. Thank you so much for joining us. Dennis Pitcher there, tech entrepreneur and FinTech columnist. Time now for a quick break, but when we get back, hi ho, off to the crypto mines we go. An inside look at the 24-hour-a-day mining operation of two local crypto fans. Stay with us.
New Toyota Rush, Bermuda's biggest SUV with 7 seats. There's always plenty of room. Available at Bermuda Motors.
From happy beginnings and life choices that we make along the way,
Colonial protects your lifestyle with the best insurance cover at the best possible price.
Health insurance with far-reaching benefits.
Family protection and long-term financial plans.
Business insurance and generous employee benefits.
For happy beginnings to happy ever after, visit CGIGroup.com.
Colonial, where people come first.
Welcome back to the program. Well, when James W. Marshall struck gold in California in 1848, It ignited a stampede of gold seekers looking to get rich quick. Some 300,000 people flocked to California during the gold rush from as far away as China. Very few walked away wealthy. 160 years later, Satoshi Nakamoto sparked a gold rush of his or her own with the launch of Bitcoin. You see, no one knows for sure who Satoshi really is, but that hasn't stopped people from taking up the modern-day pickaxe, the computer, to go digging for crypto gold.
It's half a cent right now.
Some men have a man cave.
I think this is the best one to mine right now.
Derek Lamb and Damian Matthews have a crypto cave.
What's the hash rate?
It's 4.7 right now for GPU.
The former IT colleagues are now crypto comrades, mining some 8 different coins.
We have the Monero, the Bitcoin. Like, it's on and off. It depends on what the market is and which one we felt best to mine.
Simply put, mining is a way of unlocking new cryptocurrencies. People around the world compete to solve complex math problems using computers. The miner who solves the problem first is rewarded in cryptocurrency.
How much have you made from mining?
Mining, a couple hundred.
A couple $100 bucks.
Yeah,
so you're kind of like broken even when it comes to the cost of the investment that you put into the technology.
Yes and no. If we would have sold in January, we had a couple thousand.
Yeah.
Okay.
We had a couple thousand because Monero was high. Unfortunately, it's going down to like, what, $100 a coin?
Since our interview, Monero's value has fallen another 50%, and the duo have stopped mining it. Volatility is a hallmark of cryptocurrencies, where sharp spikes are second only to steep slides.
Every time I see a message from him, he's like, hey, it's going up to a certain amount of money. And it's like, wow. It's exciting to see these fluctuations.
There's another factor at play when it comes to the value of cryptos: input costs. Mining can usurp oodles of electricity.
Just this one facility is sucking up as much energy as 6 hours.
Right here in this space.
A Princeton professor says Bitcoin mining alone accounts for about 1% of the world's energy consumption. That's led miners to seek out energy-cheap countries like China, Ukraine, and Canada. Mining 1 Bitcoin in Ukraine can be $3,000 cheaper than doing it in the United States. And with Bermuda's energy costs 3 times higher than in America, well, you can do the math.
How many hours a day are you guys mining? Is it a 24-hour-a-day operation?
Yeah, nonstop.
How do you guys pay your electric bills?
Well, you see the hash rate? You see it's very low?
Yeah.
It's not running as much electricity as Bitcoin. That's the big factor right there.
Derek says that mining less energy-intense coins adds about $20 a month to his electricity bill. So as long as volatility is kept in check, the crypto man cave shouldn't come crashing down anytime soon.
A nice way of thinking outside the box.
Yeah.
Well, Derek and Damian were very protective of their mining operations, and I really can't blame them because in the first 9 months of this year, nearly $1 billion was stolen in crypto hacks. That's according to blockchain security firm CipherTrace. Cyber insurance could help protect those assets, but very few companies have taken the plunge. Marsh, that's the global consulting and brokerage firm, is trying to change that. It placed a policy as early as 2014. Talk about early adopters, right? Well, I recently sat down with Sarah Downey. She is the co-leader of Marsh's digital asset risk transfer team, and she started off by describing what the crypto insurance market looks like right now.
The market has grown. It varies day by day. So, one day there might be 10 markets who are very interested in one risk, and the next day there might be more or less. But it's a learning process. And so at Marsh, we've formed a group called the Digital Asset Risk Transfer Team. It's the DART team. And our main focus is on educating the insurance market. So the reason that the market is maybe a little slow to develop, or there's a little less capacity than for traditional risks, is because there's a lot less data at this point around digital asset companies. They're a newer industry, a newer risk class, so there's just less data involved. Also, the regulatory environment continues to evolve as well. And so because it's still continuing to evolve, there's a little uncertainty, so underwriters are a little skeptical. And then, of course, what we read in the paper every day are sensationalized stories about some of the bad actors, which, is not specific to the digital asset world. That's really how the media operates, which is great. But it doesn't help with the insurer's comfort level getting into this space. But, at this point, I think the insurance market has an understanding that blockchain technology is here to stay. Digital assets in some form or another is here to stay. So in our experience, almost all of the markets, whether in the US, the UK, Bermuda, everyone is very interested in learning about this space and kind of getting their arms around it.
Where do you see the biggest opportunity when it comes to writing this type of insurance? Is it for the individuals who are buying or mining cryptos? Is it for the businesses that are using cryptos, or is it for on the custodial side?
It's for everybody. I mean, every company really does need some type of insurance out there. So we've worked with exchanges, we've worked with custodians, incubators, advisors, companies who have done security token offerings, some who have done ICOs. So it really varies. From the insurance side of things, it is a market that everyone should be in, especially now. So what we're seeing, especially when it comes to things like directors and officers liability coverage, for example, we're seeing the insurance markets quote coverage, all with various terms or various limitations involved, and all at different prices. And then it's really up to the client to decide what works for them. And so for the carriers, now is really the time to get into the space, take advantage of the opportunity to create the limitations on your own policy and get the money for it.
You touched upon this already when you talked about these sensationalized stories in the media, but it's true. There have been thefts, there's been hackings, there's been, get-rich-quick schemes that are out there. Why would the insurance sector want to get involved in something that's been described as the wild, wild west?
But those really are just stories. For as many bad actors that are out there, there are double the amount of great companies in the space. And for us, we're in a great position. We get to pick the top tier clients to work with. And those are the ones we bring to the market. We don't want to waste insurance underwriters' time bringing companies that maybe don't have great management teams or great vision to them. So we really bring top tier clients to them.
There's a company, BitGo, which was one of the first crypto companies to get insurance, but they ended up dropping it a year later because it was just too expensive. What's the pricing look like for a crypto business compared to a normal business that sells shoes?
If you asked me a year ago, I would have been inclined to say that it's slightly more expensive for companies operating with digital assets than for a more traditional company. That's not necessarily the case today. I know that some of our clients, we've been able to place coverage for them at the same rates we would for a traditional company. So it really varies depending on the company.
One of the hallmarks of cryptos is that they tend to be very volatile. So you can buy a coin on a Monday and it'll be worth $10. And then on Friday, it could be worth $1,000 or it could be worth $2. So there's a lot of ballooning and deflating when it comes to that price value. How does that get factored into the policies when there is so much movement when it comes to the value of the asset?
So it depends. So it really mostly plays into a crime policy, and a crime policy or fidelity policy is there to cover theft of assets. And so what you do beforehand, it's not so much the fluctuation that really is an issue. You just have to make sure you agree upon how you are going to value a loss. An example would be you would agree that the price at the date of a loss, you will value that based on the average price of that certain cryptocurrency across the 3 major exchanges. So it's just something you have to agree to in advance.
What's Bermuda's role in this?
Bermuda is always one of the most innovative locations for insurance. Based on our conversations that we've had, the Bermuda market isn't quite there yet as far as underwriting the financial and professional lines coverages, but we have worked with the Bermuda markets in some of the alternative risk transfer options that we've created for some of our clients in the space. And by alternative risk transfer, I mean, we've worked with Marsh Captives, which is a group both here in Bermuda, in the US, as well as in Europe. We've also worked with Guy Carpenter, our sister company, in creating reinsurance opportunities. And Bermuda has been very involved in all these creative options.
So one of the things when it comes to cryptocurrencies that perhaps has been a hindrance for them to become mainstream is the insurance, because a lot of financial institutions don't want to take on the responsibility of the risk of it getting stolen or the companies going belly up. How do you think insurance could help mitigate some of that fear?
So for the more established financial institutions like the banks, they already have insurance in place. I suspect that all of the insurance markets will likely not want to leave insuring those companies. I think there's good partnerships there. So when those banks take on cryptocurrency or some form of digital asset exposure, whether it's through being a custodian or some other type of service, I'm pretty sure the markets will continue to want to support those banks and those more traditional FIs. I think with the involvement of the more traditional FIs in the space, I think it'll only help in general. I think the insurance market will become a lot more comfortable with this space, knowing that there are some more traditional players involved that they have a history with and that they feel comfortable with. So I think when those bigger and more traditional banks get involved, I think it will only be a good thing.
Well, certainly an exciting new field for the insurance industry. Time now for a quick break, but when we get back, I look at some other stories making headlines around the globe.
Win a trip or two to the 2019 Trinidad Carnival. When you purchase a car from Bermuda Motors, your name will be entered into a draw for a chance to win an all-expenses-paid trip for two, including flights, accommodation, and tickets to the Trinidad Carnival. Visit Bermuda Motors on Church Street or bermudamotors.bm.
Oh dear. If you're unsure where the trail leads, you're on the right path. Go to Bermuda.com.
Ever wondered what smart health insurance feels like?
Colonial's 24/7 worldwide health insurance does most of the thinking for you.
1,500 CGI health claims are settled daily.
60% of claims settled automatically.
You can access your health plan almost anywhere, anytime.
And have smart wellness with online data tracking.
And more provider choices for you and the people who matter most.
Premier Health is smart health insurance, and it feels good.
Colonial, where people come first.
Welcome back to The Breakdown. Let's get you caught up with some business news making headlines around the globe in tonight's Quick Take.
The chief financial officer of Huawei Technologies has been arrested in Canada as part of a U.S. probe into whether the Chinese firm violated Iran's sanctions. Huawei is the world's largest supplier of network gear used by phone and internet companies. The arrest could rattle a U.S.-China trade truce, which was agreed upon on the sidelines of the G20 in Argentina last weekend. The world's two largest economies have been engaged in a tit-for-tat trade war. Higher tariffs on U.S. and Chinese goods could impact prices here in Bermuda. The massive data breach of hotel group Marriott International could have been carried out by Chinese hackers working for the Chinese government. According to Reuters, the hacking techniques used in the Marriott breach mimicked previous attacks by Chinese hackers. Marriott announced last week that data on up to 500 million Starwood customers may have been stolen in the 4-year-long breach. Lyft is going public. The U.S. ride-hailing service and Uber rival filed papers with the SEC for its long-anticipated initial public offering. Details, though, are scant. The filing was confidential, and Lyft didn't say how many shares it plans to offer or at what price. The company says it plans to IPO after the SEC's review process if market conditions are right. Reuters is reporting that will happen in the first half of 2019. Lyft was last valued at about $15 billion. That's compared to Uber's $100 billion. Uber is also expected to go public next year.
All right, that's going to do it for this edition of The Breakdown. Thank you very much for joining me. If you missed part of the show, The Breakdown does rebroadcast on Sunday mornings at 9 a.m. and now also rebroadcasts on Wednesdays at 6:30 a.m. You can also catch it on the Bermuda Broadcasting YouTube page. In the meantime, find me on Twitter for your latest business updates. Next week, we are taking the show on the road as we break down a $6 trillion problem, cybercrime. No one and no business is immune, but far too few people are properly protecting themselves. We're going to get the experts to weigh in from the International Cyber Risk Management Conference, which kicked off today and runs through tomorrow. I hope you'll join me for that show. Until then, take care.